Welcome back to Trader UK, the money management channel. Big hello and a big thank you to what is now over 1,900 channel subscribers. In today's video, we're going to take a look at some of the problems that new investors face and some of the common pitfalls that you might want to avoid. So if you are looking to enter the stock market in 2021, then this is the video for you. To cover this today, we'll run through 10 of the most common questions asked. Some of these are questions that come up a lot on the channel, and some of them are genuinely questions that I was asking myself before I started investing, so hopefully there'll be something in there for everyone. Before we do get started today, as always, if I can ask you all to like the video for me, and don't forget to subscribe to the channel for more finance-related content. Now, the first question that we have here is, can I start investing with $1,000? So the quick answer to this question is yes, absolutely. In fact, you can start investing with any amount that you have available, whether it's $100, $1,000, $10, providing you're meeting the minimum deposit requirements that the platforms have, and quite often this is $10, $20 or so, then yeah. More importantly than can you start investing, you should start investing as soon as you can, whether that's $50, $100, $500, it doesn't matter. Now is always going to be the best time to start. This was actually something I put off for a long time. I didn't start investing because I wasn't sure that it was going to be worth my while. My thinking was, if I have $1,000 to invest and the stock market in general returns 10% per year, I'm only going to make $100 and it's not really worth my while. I'd rather put that money somewhere else. What I didn't consider was, well, what if I put that $1,000 into a stock that outperforms the market, like Tesla, for example, where you got a 700% return in the same time period? Then all of a sudden you've made $7,000 in a year and it becomes a little bit more interesting. More importantly though, the learning curve in the first couple of years of investing is very, very steep. You're going to learn so much. So hopefully you'll accumulate some gains, but you will definitely accumulate some knowledge. So it's always best to answer the question. It's best to start now with whatever you have and then just introduce capital as you go. Question number 2 we have here is, which trading platform is best? This is one that comes up a lot on my channel actually. It's a bit of a difficult one to answer because there are a few limitations. First of all, a lot of my viewers are from different places around the world, so normally the platforms are limited to only available in Europe or only available in the US, so it's a little bit different for everyone depending on where you're from. If you're from the UK, I would say Trading 212 is the best platform that I've found. It seems to have everything that I need. Maybe if you're looking for more complex products, maybe if you're day trading, I'm not sure if it's the best option for you. There might be better options out there, but certainly if you're a beginner investor and you're looking to buy and hold stocks long term, it will have everything that you need. For viewers based elsewhere, my best advice would be look for a platform that is commission free, where you don't pay per transaction. Normally these platforms will make money in the spread, the difference between the buy and the sell price, and you don't normally see that money being deducted, but they are making money there. So if you're paying for a transaction fee up front as well, you're kind of paying twice each time that you trade. So avoid that if you can. And then I would say it's also good practice to test out a few different options. That's what I did when I started investing. I used a number of different apps. A lot of the apps now will give you the chance to trade with fake money, so you can get used to buying and selling and using the interface. See if you actually get along with the app and you like it before you have to deposit real money. But certainly if you are from the UK, then Trading 212 is the best. I've already done the research for you. Question number 3, should I trade options? So it's not really my place to tell people whether you should or shouldn't trade different products. The truth is, different people get on with different products. What might be really easy for you, options trading, you might really understand it and make a lot of money, might be really hard for me. So if I told you, no, don't trade options, then I would just be projecting my fears onto you. What I would say though, from my experience, investing in simple products, investing in stocks and shares, ETFs, and holding them long term is the easiest type of investing. Very easy to pick up. There's a lot more margin for error All you really have to do is pick a company that's going to increase in value over the long term. Doesn't matter if it's up and down and all over the place in between. If you've got a 3 or a 5 year outlook and the company increases in value over that time, then brilliant. When you start trading options and sometimes more complex products, you're often putting a time scale on. Not only are you picking the direction of if it's going to increase in value or decrease in value, but you're putting a time scale on it as well. So that makes it a little bit more difficult. And that's why I tend to stick with a simple buy and hold of stocks and ETFs. It is important though that even if you're just doing that simple long-term investing, it's a good idea to have a basic understanding of options, futures, warrants, and these different types of products. You don't necessarily need to trade them and make money from them, but if you understand them, then you'll understand how they affect the market, and you'll understand the lingo, the terminology as well. Question number 4, we have, should I trade on margin? Margin, if you don't know, is basically borrowing money to invest and paying a rate of interest on that borrowing. You might hear it called leverage or leveraging. You might hear the term CFD. That's the type of account that you use to trade on margin normally. This is a really good question actually, because I see a lot of YouTube investors commenting on this, and their comments tend to be very negative towards CFD trading on margin or leverage, whatever you want to call it. They often say that it's akin to gambling, which I find a little bit funny. Originally, I did kind of take that view, and I have steered clear of margin, to be honest. But my answer now comes in 2 parts, now that I've spent a little bit more time in the market. Firstly, if you are new to the stock market, it's probably not a good idea to trade on margin. I wouldn't recommend it at all. Find your feet, learn your craft first of all. But I would also be lying to you if I were to say that I didn't see a place for it. At the moment, some of the valuations are very high, so I probably wouldn't go near margin. However, if we saw another 30, 40% drop in the market, like we saw back in March, April time, then yes, it would have its place. I would trade on margin, I would borrow as much money as I could, and I'd put that into the market. So I certainly see a place for it. And the irony is, a lot of these investors who say CFD margin is akin to gambling, they probably have a loan for their sports car that they took out to buy an asset that only ever depreciates, but they wouldn't take out a loan to buy an asset that often appreciates in value. So it's a little bit ironic, that one. But for beginner investors, I would probably say don't get too carried away. Stay away from margin, stick with your own money whilst you learn your craft, and then maybe further down the line you can review it again. Next question, should I invest in investment funds? So a lot of investors at the moment don't seem too keen on funds. I think a big misconception is that the funds don't offer potential for a big return, or maybe just that they don't offer the same potential that an individual stock does. And of course, there's some truth to that. The fund tends to be a bit more diversified. What I like personally, though, are passive funds rather than managed funds, and there seems to be a trend towards that. I like ETFs that will track an industry. And let me just show you on screen here an ETF that I own. This is iShares Global Clean Energy Fund. This has returned about 30% in 3 months or so that I've owned it. So I think that return is a lot higher than most people would expect. So the answer to the question is yes, I like funds, I like ETFs. Question 6, how to research a company. So I'm actually going to do a full detailed video on this, on the process I go to find new companies and then to look into those companies as well. What I would say is start with the financial statements. Make sure you go and look at the quarterly statements and the annual statements as well. Always read the notes. Nobody seems to read the notes. All the juicy stuff, all the good information is going to be in the notes. If you think of Apple recently, I think their most recent quarter, I didn't actually read their statements, but I think their most recent quarter was when the iPhone sales dropped by about 10-20%, something like that. And if you just look at the numbers, that looks terrible. If you go and read the notes below, it'll probably say in there somewhere, iPhone sales were down in the quarter compared to last year because we delayed the launch of the new model due to coronavirus or due to the pandemic. So that's where you'll find all the information that ties up the numbers. So make sure you're reading the notes. Needs to be quarterly statements and annual statements. And make sure you listen to conference calls as well. So all the public companies on their website will have an investor relations page where you can go and find all this. You can listen to the calls, you can watch the videos with the board. It helps you to get a good understanding and a bit of knowledge about the management teams behind the companies. And then I always do a quick search for the company I'm looking for, whether it's Tesla, I'll search for Tesla or Tesla stock, switch across to the news tab, and then work my way through the relevant articles. That is where I would start. Number 7, how long should I invest for? Well, I think that, to be honest, once you start investing, that's it. You're going to continue investing, especially if you're any good at it. Of course, I'm sure there are people who start investing thinking, right, I've got 5,000, I want to make 10,000, then I'm going to take it out and I'm going to buy that sports car that I really wanted. But if you've got that investor mindset, then you're going to start thinking, well, my 10,000 I can turn into 20,000, my 20,000 to 40,000, and so on and so on. So I think if you're good at investing, it's something that you'll continue doing for a lifetime. Whether that was your original plan or not, I don't know. Of course, as you go, you'll probably want to realize some of the gains and take some money out. But yeah, I have no doubt that once you start, if you're good at investing, then it's something you'll continue to do for the rest of your life. Number 8, how many companies should I invest in? Or how many companies should you hold in a portfolio? So this was something that I struggled with originally. I knew that diversification was important, but I didn't know whether I should hold 5 companies, 10 companies, 100 different companies in my portfolio. There isn't really a magic number to go with. It's going to depend on your risk appetite. It's going to depend on the size of the portfolio as well. What I would say though, it's good practice to hold different companies, different industries, different geographic locations. To give you an idea, in my portfolio here, I probably have 20 different positions on a £40,000 portfolio spread across, like I say, different countries, different industries, and different countries as well where possible. Don't let one position get too big either. Don't let it hold too much weight in the portfolio. And also try not to confuse diversification with needless buying. That's what I did originally. I saw the importance of diversifying, so I would hear everyone talk about Coca-Cola being a solid company, GlaxoSmithKline being a great dividend payer, all these kind of things. And I would invest in companies that sounded like they were solid companies, but I didn't really have an interest in them. So don't confuse those two things. You can achieve diversification by investing in exciting companies that you actually believe in. Question number 9 here we have, should I wait for the market to drop before I start investing? In an ideal world, that would be really nice. Yeah, you would enter right as it bottoms out and then you would sell up as it peaks again. In reality, it doesn't often happen, or rarely happens like this. Nobody really knows which way the market is going to move. Lots of indicators that can help you predict it, but the truth is no one knows exactly when a market's going to drop and when it's going to rise again. You'll be able to find a lot of videos on YouTube at the moment, for example, saying about stock market crash coming in 2021. If you look back though, you'll find those same videos for 2020, 2019, 2018, 2017. Eventually they get it right, but the majority of the time they tend to be wrong, so take it all with a pinch of salt. For the majority of people, I would say try to time the market. Doesn't usually work. It's easier to enter the market now with what you have and then just average in over time. Add a little bit, add a little bit. That way, if the market moves down, you're buying in as it moves down and you're lowering your cost price. If it moves up, then yes, you miss out on a little bit of the gains, but you take away that risk of putting everything into the market now and then it drops 30, 40% and it feels terrible. So yeah, I would enter the market now and then average in. Question number 10, where do you see the most potential right now? I've done a few different videos where I talk about this and I would still say the same. Anything that's related to electric vehicles, although that market is a little bit hyped at the moment, some big valuations in there, but still a lot of upcoming companies and a lot of money to be made there. Anything relating to clean energy, I think we're really grossly underestimating the rise in demand for energy in general, but of course that demand nowadays needs to come from clean energy. Robotics and automation is a big industry I like to focus on, and clean water as well. You can find some really good ETFs that will track water companies and they've been performing really well for me. All of those industries are going to perform well over the next 10 years or so. The reason I like them, the technology for all of them is here and now. We're not waiting on anything. There are some other industries as well that show a lot of potential, like space tourism, that kind of thing, but we're a few years off just yet. So I'll stick with those ones for the moment. Those are my 10 questions and answers for new investors looking to enter the market in 2021. I hope that you found it useful. Thank you all for watching, and I'll see you next time.